Hello folks, this is Dave Lawrence again, and just wanted to bring a little message here, a short message about the Occupy Wall Street movement, and also just the news of today that the Senate voted down the jobs bill. And actually it wasn't even the bill that they voted down to continue debate on the jobs bill. So it's kind of what this Occupy Wall Street movement is all about, in a sense, is that we really don't have a representative government, that we've got these politicians that won't even have a debate about what might benefit the American people. You know, I know they've probably been in some negotiations and they've talked about the content of the bill, and there's some things in that bill that I probably wouldn't agree with, but I don't think that you vote not to have a debate. I think you vote to debate to make changes, good changes, for the American people who the Senate represent. And one of the other things that the Occupy Wall Street movement has on their agenda, and again there are many, probably too many to go through, especially in one sitting, but the other biggie, real important issue in my opinion, is this all, you know, obviously Wall Street and how they've been unfettered, they're unregulated, they're unrestricted, even though there was a bill that came into existence, the Dodd-Frank bill that came into existence after the financial collapse, you know, after President Obama came into office. And that bill has basically been laid to waste. You know, it hasn't really gone into effect, even though it is the law. The Republicans, once again, are trying to get in the way to impede restriction. And you know, what really needs to be restricted on Wall Street is, again, just the hedge funds, the flash trading, you know, these things that just manipulate the entire market for their own good. Again, the real idea of Wall Street and investing had to do with providing equity for corporations to do business, to grow their businesses. But this flash trading and these hedge funds are run by a few people, and it's all executed on a huge computer algorithm. You know, millions of trades within seconds each day, continuously through each day, just to enrich those few people that have access to it. Again, this has nothing to do with the benefit of the American people, even really enriching corporations that are building real products and providing real services. This is just about enriching people to have access to this computer and this special algorithm that hasn't been regulated. But it has been speculated that possibly Congress could pass a law to where these high-frequency traders, these flash traders, should have to pay a transaction fee. So if they're doing millions of transactions a day, or even was only thousands of transactions a day, again, that's substantially more than what your average investor would do in the span of a day. So it doesn't hurt the average Joe investor to pay a transaction fee above and beyond a certain amount. But these flash traders certainly would have to think twice about what they're doing, or whether what they're doing would still make them enough billions or trillions of dollars if they had to pay per transaction taxes. And I think that's something that our Congress and the regulating agencies in D.C. really need to look at. But then again, when you've got 5 lobbyists at least for every senator and congressman in our government, 5 lobbyists from the banks and from Wall Street per senator and congressman, you know, again, we need our voices heard, because the lobbyists certainly have been heard. And I would just urge people to get involved in Occupy Wall Street. Again, whether you're left-wing or you're right-wing, I think it's already been proven. I mean, Alan Greenspan said himself after the debacle of 2008 that his paradigm, his philosophy of how markets were self-correcting was wrong. And it's kind of sad to see this old guy come to this realization. But it's not too sad, because again, we have to remember he is rich, and he went into all this many years ago, 50 years ago, with his eyes wide open, and just chose deregulation and resisted anybody that wanted to regulate Wall Street. And you know, now he's been humbled, how the mighty have fallen. At least he did admit his mistake. But again, he's certainly not looking for a job. He certainly doesn't need a job. He's still got his money. And I just pray it's not invested in some of these derivatives or credit default swaps. But for now, I'm just going to sign off and say thanks for listening.